Welcome to the Market Edge Tech Talk with Will Paule and special guest David Blake. We're going to review the market conditions of the past week as well as longer-term trends from a technical perspective, take a closer look at the major indices, and to wrap it up, dig into a handful of individual stocks and ETFs requested by subscribers. If you have questions or want to submit a stock for next week's webinar, email us at support@marketedge.com.
Hello and welcome to the Tuesday Tech Talk for July 10th. My name is Will Paule and I'm here with my co-host David Blake. David, would you like to say hi?
Hey, Will, how you doing?
I'm doing all right. Let's jump right into it. Why don't we take a look at what happened last week?
All right, well, let's go here to the last week's market letter. And we'll page on down to the bottom here. Okay, last week we had a short, volatile week, which was surprising. Investors shrugged off that looming trade war, and the major averages climbed a little higher. NASDAQ small cap Russell 2000 outperformed. Actually, as the week ended, they had the sights set on the old record highs on Friday. Rally was broad-based. We had every sector except energy finishing the plus column. We had healthcare and technology, utilities, REITs, and consumer staples all led the advance. The U.S. dollar drifted lower last week, and the yield in the 10-year Treasury settled at about 2.83. Now, that narrowed the yield curve, but it did give a boost to interest-sensitive groups like the utilities and REITs, consumer staples, which actually look pretty good in here. Okay, lagging the broader market, however, and still looking a little bit weaker, industrials, financials, and materials. Despite yesterday's big jump up in financials, they still look a little bit iffy. I think there's something that could be bought on dips, but I don't think you want to chase them higher at this stage. All right, the technical market, as you can see on this page, improved last week. We had momentum jumped from a 3 to an 8, which is a nice jump. That means that the broader indexes are all outperforming the Dow Jones currently. We also, as of yesterday, we saw the Dow Jones actually trade back above its 50 and 100-day moving average, which is a big plus. We also had the Dow Jones Transportation Index cross above its 50 and 100-day moving average also. Of course, the S&P 500 is solidly off its 50. So a lot of good positive momentum going on in the market right now. The NASDAQ and Russell 2000, as mentioned, look poised to punch new highs possibly this week, maybe even later on today. Looks like the summer rallies got back on track. Breadth was bullish. If you come in here and look at the market recap section.
Over there.
Okay, go back to the main page, click on market recap. This will just let you know what I look at as far as how much positive. Okay, this is what I look at to see the internal makeup of the market. If you come on down here, we'll look at the NYSE Advanced Decline line. Made several new all-time highs last week. That shows that there's good accumulation going on here while the market's struggling with the trade talks. When you see a move like this with accumulation, that means that's not mom and pop buying all that. That's the institutions are loading up ahead of earnings on a broad segment of stocks. You can also see the NASDAQ Advanced Decline is breaking out here to some new highs also, which again shows solid accumulation while all the negative trade talks are going on. I also come down here to the NYSE and NASDAQ new highs versus new lows. We would like to see more expansion in this, but we are finally getting up to triple digits on both exchanges. That's solid, and we also see the number of new lows going down. So ideally, you'd like to see this up above 250 or so on the NYSE, and also at least 200 on the NASDAQ. That would show that there's more leadership than just the FANG stocks over here. On the NYSE, we talked about the industrials and the financials are lagging a little bit. We'll need to see some improvement in that. If we can get the yield in the 10-year back up, even if it gets up to around 2.29, maybe 2.95, that'll give a little boost to the financials and broaden that yield curve out, which is good for the banks. Also, this Friday, we get the big money center banks. We're going to have J.P. Morgan, Citigroup. Let's see, I think maybe Bank of America and a few of the other big banks. We're going to report earnings on Friday. We're expecting good earnings on that. That could give the financial stocks a little bit of a boost. That would help the broader market, that's for sure.
Let's move on to our next section, our module of the week. Let's take a look at Stock Watch. What do we have going on over here?
Yeah, I wanted to bring this up this week. One of the I get questions about what do I look at, when I'm looking for different ideas. I have my own report output here that may be a little bit different than what some people have. I can collapse that menu over here so I can get more of a thing. But one of the new lists that I have in here, I call it sectors, and this kind of goes along with what we're going to look at on industry group during the week also. So if I come over here, I look at the 50-day relative strength. These are the different sectors that we have. There's the financials, industrials, utilities, materials, energy, consumer staples, healthcare, tech, everything we're going to look at. Come over here to the 50-day relative strength, and now I can see exactly which sectors are leading the broader market. In this case, we have the XLK, the tech sector, is outperforming the S&P 500 by 4%. Consumer discretion is outperforming by 3%. REITs are outperforming. Also, healthcare is matching the S&P. But also, you want to see down here like consumer staples, just underperforming a little bit. However, you can see that we have a power rating of 80, which is very strong, and we can see the up-down slope is bullish. So this is, even though it's been underperforming, when you see a strong power rating like this, and then you see the up-down slope turning up, it means that you've got a segment or a sector that's been underperforming but is now coming up. But here's also utilities have been underperforming the broader market, but they are now in their accumulations. You can see over here, and they have a power rating of 80 also, and that's telling you that we're seeing more money. Now, I think the utilities, although when in a rising rate environment, you normally won't see these defensive stocks or sectors like consumer discretion and real estate and utilities. But we're seeing, as long as the longer-term rate stays under 3%, I think you're going to see more money going into some of these utilities and REITs where they can pick up 6-7% and hold on to those for a little bit until you start seeing some more acceleration, either in inflation or the yield curve where the rate starts going up. And also, now when I look at this, if I want to find ideas in the consumer discretion area or the healthcare sector, if I go up and click on industries, okay, now I go over here by relative strength. Okay, so we looked over there that the top sectors right now. We have the energy is coming up, materials are coming up today, consumer staples, utilities. If I look over here, okay, well, here's household products, non-durable. This is going to be your consumer staples. Very nice looking chart moving up, and it sold off, and now we're heading higher. Here's on the technology phase. Your semiconductors are related. So you go in here, you look at this, and you'll go in here and you'll find a list of all the stocks that are probably going to outperform. You can see the S&P versus the technology or semiconductors up here. Now come on down here, and you can list all these stocks that are along with a 0 or -1. You get a strength reading over here. Should outperform the broader market. Here's Power Integrations. It's had a nice little run in here. Here's Micron. Still looks good. It's had a nice pullback down to this 51 area. We can see that move higher. Intel had a nice pullback. Here's Applied Optoelectronics or Optoelectronics has a nice rounding bottom over here. This is where you'll find some ideas. You go to that sector list if you make it on your own, and then when you see what the top sectors are, then come back over to the industry group here at the top, and you'll find exactly what segments of that industry group are the leaders.
All right. Very good. Let's move on to our next section. Let's take customer requests. I think we've had 2 this week, XBI and what was the other one?
XBI and KRE. That's the regional bank ETF. Both of these are ETFs. If you look at the XBI, in the past, I've told you always want to have a couple of this environment. You want to own a couple of biotechs no matter what. We're also now starting to see the biotechs breaking out to new highs on this ETF. Again, you can go over to the industry group. and find a list of different biotech companies and find good buys in that. I'd go to advanced tools and show you some of these. You can also look at for biotechs. You could go in there and look at point and figure early alerts, which would give you a list of stocks that are getting ready to break out in that sector or industry. And that's another place you can find these. But XBI looks strong in here. I would be a buyer of the biotechs. You don't want to just buy one. If you can either buy the XBI as an ETF and get a broad segment that's not so volatile, or if you want to make your own basket of biotech stocks, you might buy 3, 4, 5 of them. That way, if you have 2 or 3 of them that hit on a new drug, you're going to have a big return. The other ones, one of them may not do anything. You're probably going to have one of them that's going to come out with a new drug that goes nowhere and gets hit pretty hard. So the ETFs are much less volatile. Gives you a way to see the upside. But if you're looking to get more bang for your buck, go to the industry group and look at biotech and find the ones that are outperforming the broader market. A lot of times when you're seeing these things get good accumulation, the biotech are where you want to be on some of these. Here's the shorter term chart. You can see this thing's gone from the 80s up over to 100 now, and just in the last 5 or 6 months. Now the other one is KRE, which we have an avoid on, which is kind of to be expected. Now you can see this big run up yesterday, but XLF, which is the sector that the regional banking ETF or stocks are in, actually had a 14-day losing streak. So you're way oversold. You got a big bounce yesterday, ran into resistance. A lot of the stocks ran into resistance up around their 50 or 100-day moving average. In this case, what I've been saying all along, in an environment like this, when you get a big sell-off in the banks or even the regional banks, you can put some to work. Scoop up some that are oversold, mainly because we have a rising rate environment that's going to come up, and I think these will outperform over the long term. You want to have some exposure to that. You're not in a hurry. Just because it jumped up yesterday, I wouldn't be coming in here to buy them today. You might wait for this to pull back, and then let the technicals on this here. If you look at the second opinion, everything's still pretty bearish. It was overbought according to the stochastics. You're still underperforming the S&P 500. But when you start to see some of this, the technicals on this start to improve, maybe let the score come up here to maybe a +3. You get upgraded to an early entry long, and that would show you more time to buy these things. You don't want to chase the banks and stuff right now, but again, on some big pullbacks down here to support, maybe even around 60 or 61, you could probably nibble away.
Thank you, David. Well, that wraps up our customer question section. Remember, if you'd like your questions answered on the show, email them in to support@marketedge.com and make sure to say that you'd like your question answered on the next Tech Talk. You can also call us at 1-866-MKT-EDGE. That's 1-866-658-3343. Just remember to tell whoever answers the phone that you've got a question for the next Tech Talk. All right, David, you want to wrap it up?
Yeah, I just want to point out one last thing here, and that is, last week we did get some, President Trump did get some conciliatory action from the European leaders on the tariffs. The U.S. and China remain locked in a tit-for-tat trade war, but we're now heading into earnings season. For now, the market seems to be favoring earnings over trade. That's why we had this big jump yesterday. Economic data remains strong. Friday's jobs report was well received. It's not too hot. I believe that's probably going to give the Fed some room on increasing rates later in the year. They won't be in such a hurry where the economy seems to be heating up where they have to move. Second quarter earnings are beginning to trickle in this week. We had PepsiCo came in, beat earnings estimates and revenues. I think the stock jumped up 12-13% today. Like I mentioned earlier, we have 4 or 5 of the big banks coming in. The trade headwinds, I think, will persist for a few more weeks. It's likely the market participants are going to probably focus on the earnings starting this coming week, and that, I believe, could boost the major averages to new record highs. We're hoping that it looks like the Russell 2000 Nasdaq will probably break out the new highs maybe even this week, and that should drag the rest of the market up with it. So I think we're in a pretty good environment for stock traders going forward, and we'll we just hope we get a little bit more bang for the buck this earnings season than we did last quarter.
Excellent. Thank you very much, David. And that's everything that we have for you this week. Tune in next week, and we'll see you guys then.